Your hosts tonight will be Steve Levy and Mike Lee. Both are senior traders here at the T3 Trading Group and mentors for T3 Live's new Trade the Open mentoring room. T3 Live and T3 Trading Group are separate but affiliated entities. Now, both Mike and Steve felt for a long time that Momentum Room really didn't capture what their trading style was all about and wanted to change their approach to reach a more specific audience. So after way too many brainstorming sessions, the T3 Live team thought that keeping it simple was the best way to go and decided on Trade the Open as a good name for their new room. It best captures in the simplest terms the way that two of our leading mentors attack the market every day and offers a much more focused approach to part-time traders who only have a few hours a day to trade. Now, just some background on our hosts. Levy's been trading the equity market since about the year 2000, since August. In that time, he's mastered the art of finding successful chart patterns and pinpointing the proper entries and exits for trades. His motto is never turn a winner into a loser, and he trades remote from Philadelphia, Pennsylvania. Mike's also been trading for 13 years. He devotes himself to risk management, and he's a master at sort of the psychological aspect of trading. Now, both Mike and Steve trade cash flow-based strategies and collaborate in their mentoring room to help traders optimize their returns and reinforce patience and discipline. Mike and Steve have made an art form out of finding the most successful chart patterns. Now, tonight, T3 Live brings you Lee Levy and the Trade the Open approach. They'll present some of their patterns and advice for taking profits when you have them. Now, I'm going to check in back after the webinar. Should you have any questions about the Trade the Open mentoring room, feel free to reach out during our panelists during the presentation. Questions about the content Mike and Steve are covering should be saved for the Q&A session to be held during the last 10 minutes of the webinar. Boys, take it away.
All right, thanks, Mike. Good afternoon, everybody. Welcome to the Trade the Open webinar. I am Steve Levy, as Mike said. Just give you a quick background about me in case you don't know who I am. I've been trading, like Mike said, since August of 2000. I started with Mark Sperling at Sperling Enterprises and worked my way over to the T3 companies today. I've been doing this for 13 years. I actually started as a Y2K programmer way back, and Mark Sperling actually brought me into the group, like I said. He thought I'd have a knack for doing this, and obviously the rest is history. I'm still doing it after 13 years. You know, I can't wait to get into the presentation. I'm going to give it to Mike right now to give a little intro about himself, and then we will get into it.
All right, thanks, Steve. Like Mike was saying, I've been trading since April 2000. I've seen every market since then. I have an incredible passion for making money, and as this webinar, continues, I'm going to show you how powerful, the Trade the Open can be. I love what I do. I love teaching. I love helping traders get to where they want to be. I've had groups. I've had, people learn from me, and I love trading. And I want everyone to understand the passion we have, that Steve and I have, is incredible. I've seen so many people walk in and out these doors, and Steve and I continue to make money and successfully build a business because of our rules and foundation. And I am, like Mike Milani was saying, I am about the mental aspect of the business. And when someone says, trading is 70% mental and 30% technical, then you know what? I'm going to concentrate on the mentality and the rules and discipline of this business. So let's get into the webinar. I'm excited to speak to you guys, and I'm going to turn it over to Steve, and enjoy.
All right, gang. So the obvious question is, what is Trade the Open? And basically, it's as simple as that. In the first 2 hours, Mike and I consider the open. It's the most volatile time of day. It's the most human type of day, or time of day, where there's no computers running the show, and there's a lot of institutional order flow going through the market at that time. We used to be the momentum trading room, but that didn't really tell it all like what Mike and I do. Basically, momentum means, all right, let's buy a stock, it's running, let's sell a stock, it's stopped, let's buy another one, and let's short another one. And really, that did not capture the essence of how we go about our business. We've been doing this momentum room for about 2 years, and the thing that we realized as time went on, and we look at our report cards and see where we made or when we made the most amount of our money. And the funny thing was, it's always in the morning, whether it be 9:30, 9:50, 10 o'clock. et cetera, et cetera. And the bottom line was we found the first 2 hours were where 80 to 90% of our days were made. And with that, we decided, all right, let's rebrand our room a little bit to Trade the Open. And Trade the Open is great because you can be somebody who works out on the West Coast and get up at 6:30 to listen to Mike and I, and then go to your real job at 9:30. I mean, it's a very simple concept that really has a lot of benefits. So with that, let's take it to the next slide, and I'll give it over to Mike.
All right, thanks, Steve. First off, this is a real job, and I want you guys to understand, studying your profession, okay, every profession, every business that you start, this is my business. I'm a trader. You can name it however you want to name it, but this is my individual business, and you have expenses, and you also have that learning curve. And what I've learned and studied about my trading, okay, is that, like Steve was saying, I make most of my money, okay, in the morning, 9:30 Eastern to 11:30 Eastern. 2 hours, okay, is where I'm making my most profit. I probably work about 10 to 15 hours a week and hit my goals. If I work more, potentially, I might lose because I am not trading where I am most successful. The stocks that I pick are critical. We'll talk about that a little bit into the webinar. I make money long and short. I come in flat. I'm not using the overnight macro risk. I'm coming in with a clear head and confident every day. Okay? It's very important to understand that if you're going to make something a career, you want to be focusing on what is the most successful part of your business. And I really want you guys to understand that trading is not gambling. It's not that difficult if you're sticking with your plan, doing the right thing, controlling your downside risk. We're going to talk about this. And 2 hours a day, okay? You don't get paid by the hour in this business. If someone was paying me $500 an hour, I would sit here from 9:30 to 4 o'clock. But no one is paying me to sit here. I am paying myself to make good trades at the right time that gives me the best odds for my business. Okay, I'm going to go to the next one. Why?
Okay, you're going to take that, Mike? Go ahead.
Yeah, I'll take this one, Steve.
Go ahead.
Why trade the open? Okay, I want you to understand that trading the open, okay, it doesn't mean at 9:30 and 1 second. It sets up from 9:30 to 11, 9:30 to 11:30, okay? But what I've noticed is real volume, real patterns have followed through, and real traders are trading the open, okay? I find that 11:30 to 2 o'clock is probably one of the hardest time periods for guys who are looking for follow-through or momentum, okay? And the close can be potentially good, but I want to just focus on the open, okay? We believe that this is the best time for follow-through, liquidity. There's so many patterns we look for, 2-day highs, 5-minute ranges, knowing that there are other traders. I've been trading in an office for 13 years now. There is no way there are more people sitting at their desks after 2 o'clock than at 9:30. Everyone is focused at 9:30. Everyone is looking at their stocks, playing the overnight game, focusing on what's going on in the markets, pre-market news. To me, the open is the time where people are concentrating on it the most, and I'm going to trade where people are concentrating on, okay? Patterns and moves can be cleaner with greater degree of human trading is taking place. I want you guys to remember that. You always hear of programs and technical boxes or whatever the case is. They, to me, by my experience, they don't go into effect until the volume slows down a little bit. Then they like to take control. So for a trader, the open is just perfect for me.
All right, let me just interject for a second, Mike. The one of the things, guys, that I really truly believe is this part right here. We believe the best place to find human orders. That means there's a human element to trading. I've seen many times where the market is just getting absolutely smashed, but there's a program that's holding up a stock that I feel should be going down that's not. And I'm sure many of you have felt that same way. You know, the algorithms are holding the stock up because they have orders to fill, or they're trying to hold it up because they have a certain program running that has to take it to this bid or this offer. And it's so frustrating. The human element of this job is probably the most critical, which is why yesterday at 2 o'clock when the Fed decided they weren't going to mention anything about tapering, the market went up 20 handles. I mean, that was all humans basically trading emotion there versus a computer program. And yeah, I mean, sometimes there's volatility late in the afternoon, but we find that most of the human element happens in the first 2 hours of trading. So let's take it to the next slide here, gang. Better trading conditions are one of the best reasons we trade the open as well. When there's more volume, there's more volatility. Obviously, volatility is the key ingredient for the active trader, and if you're prepared and educated to harness it, it can be very rewarding. I've had many people say to me, why trade the open the first 2 hours of the day? You can lose your whole kit and caboodle. And basically I say to them, listen, if you are a trader and you are armed with the right things, you know, you have a watch list, you have a game plan, you follow technical entries and exits, then you are as prepared as you can be for the open. Yes, you may lose some money at times, but if you have that arsenal every day, you're going to probably make money more often than not because you're a prepared trader versus one that's just trading, you know, whatever because it's moving. Higher volatility also equals higher risk, but again, when you're prepared, the risk is minimized because what we like to preach, Mike and I, is to minimize your risk and maximize your profits. So I'm looking for a trade in the morning. Maybe I'm risking 50 cents on a stock that I believe will move $2. And you can bet that I am definitely obeying that 50-cent loss limit on my downside. And Mike's the same way. That's why we are very disciplined traders at what we do, and that's what makes us very good at what we do. We're disciplined enough to know that we have to obey our stops or we're just going to blow up in the business. And that's something that we won't tolerate. Okay, lifestyle implications. Okay, obviously trading in the first 2 hours of the day can allow you more freedom the rest of your life. For me, Mike and I are on the radio Tuesdays and Thursdays from 1 to 2:30 doing education. But on Monday, Wednesday, and Friday, when I made my goal for at 10 o'clock, normally I'm going to go to the gym, I'm going to go for a run, I'll go out for a bite to eat, whatever the case may be. You could keep your day job, you know, you could make money trading and then go to another job afterwards because you need to make a little more. Maybe you're new in the business and you're making $100 a day just starting, and that's not going to pay your bills. So you have a second job that you need that extra income from. And to be honest with you, you live a healthy and a balanced life. You're running like crazy in the morning, but then come 12 o'clock, you got nothing to do. You're taking a nap. You're, like I said, you're going to the gym, anything like that. And that's the beauty of trading the open. From 9:30 to 11:30, if you hit your goal, gang, you're done. It's that simple. You don't have to hit the keys again. You don't have to risk any money. It's that simple. I hope everybody understands what we're saying right now. Go ahead, Mike.
All right, preparing. When your focus lies in the early part of the session, okay, it's even more important to be prepared, right? And the reality is, guys, I am setting myself up for tomorrow's trade as soon as 9:30 hits the bell every morning, okay? I'm always thinking ahead. How do I game plan? How do we come up with our watch list? How do we, finalize our A trade? And these are all things that I'm not telling you you need this and you have to have this. And when we come up with our watch list, we always have different types of stocks. So if right now, let's say we have a high beta list. We have stocks that we're comfortable with. We have an IPO list. We have 52-week high, 52-week low, earning plays. All of a sudden, that could be a bunch of stocks. So how we break it down is incredibly important. And that's one thing you will learn. How do we game plan? How do we do our watch list is probably one of the most important and also beneficial things that we offer. There's guys that sit, around me in the office, and they, tell me all the time, thanks, and I appreciate it, and this and that makes me feel good. But you have to understand, we're all human. We do make mistakes, and one thing that you have to understand is we're real. We're real traders all the time, and if we do mess up, you're going to know it, and that's incredibly valuable, because when you learn this business, you learn from people's mistakes. And I make mistakes. Steve, Mark Sperling, Scott Redler, everyone makes mistakes in this business, and you're not alone. And I want you guys to understand that if you are struggling in your career, you're not as far off to making money than you think. I honestly can tell you that. I believe that I can make every single person listening to me a better trader. I could even make Mark Sperling a better trader. I believe that in my heart.
He's not saying that he can make you more money, gang. He can make you a better trader, because we can teach you the disciplines that we have and the preparation that we have that will, make you the trader you want to be.
I just want to finish on one thing, okay? And without a clear plan, the trade the open, or the opening trade, however you want to, the opening bell, can be very costly. But when I always say, oh my God, there's so much risk, you're in control of the risk. That's the one thing that I love about trading, is that I can control my downside risk. Yes, I have to be disciplined in hitting it out, and I do, miss my stops, and how do I get out of a trade? This is all, stuff that will teach you, but I have risk. I have control. I can control the size of my position. I can control the stocks that I am trading. I could control the spread that I want to pay, and I can control my stop. And these are all things that you have to focus on. Focus on things that you have control over. Don't focus on things that you don't. The stock market, why this is happening. Don't question it. Just react to the position and the setup that you have. Go ahead, Steve.
Okay, guys, knowing what stocks to trade is very, very important. And again, that's basically formulating your watch list. And as you read in the last slide, I put out a watch list, and Mike and I put out a watch list every morning. And to be honest with you, most of the stocks that I have on there are repeat stocks. For me lately, it's been XONE, DDD, SSYS, QIHU, just to name a couple. And the real reason for that is they're giving you $4 to $6 ranges or lately every day. And that's something that I cannot move away from. If a stock is going to give me that type of volatility, which is the key ingredient, then obviously I'm going to stick to them. I mean, I write down every day, previous day's range, right now, X1, 54.48 high, 51.29 low. I already have that written down. So tomorrow, when I come in, I know that I'm looking at a high of 54.48. If it gets through there, I'm going to look for a trade. We look at news plays, stocks that get that gap down or up big on earnings, on upgrades, downgrades. Recent IPOs. Those are just some of the stocks that we have. And my watch list right now for tomorrow already has 7 stocks on it. Okay, and that doesn't include like the Yelps, the Keyhoos, or any stocks like that that we might find to trade tomorrow morning. Those are just stocks that I traded today, and I want to be able to trade them tomorrow. So familiarity for me is a very big ingredient in knowing what stocks to trade, because like I said, I like to gravitate to stocks that have a good range, a good average true range. Because if I'm looking, I have a lot of people who might say, Steve, what do you think of like a CHK? And the range in CHK, let's say, is 50 cents on average per day. I'm not really, I say, you know what, the pattern looks great, but it's not really my cup of tea. It's not where I want to, get involved with. Because to me, when you're trading a very slow mover like that, it becomes more of a swing type trade, and you're not really worried about trading the open. You're putting out a stop 20 cents lower, and you're letting the stock do its thing. So, that's very important to know what your watch list is going to consist of. Now, creating the watch list, okay, based on that, we create the Trade the Open watch list based on what's in play, and I just went over what's in play. Now, a lot of times a stock will come on our radar, like yesterday's IPO, BNFT. I traded that today. I got a feel for it yesterday. I got a feel for it today. It's an IPO, but it moves. I made a little bit of money in it, and then it got crushed in the afternoon. And knowing that you can't short an IPO, it really wasn't a stock that I was watching. I just noticed that it set up a decent base area around 48, half, 49. So I will be looking at that stock tomorrow. And then, we remove many stocks off our watch list. I used to trade the solars back in 2006 and 2007. Mike and I were trading the solar sector completely, nothing else. I would trade FSLR, LDK, YGE, just to name a few, all day long. I didn't care what the market was doing. I didn't care what other stocks were doing. I was making money. Mike was making money trading the stocks that we were comfortable in, and we were doing very well with that, and we were basically making real consistent money because we stuck to our plan. And as you see right there, if it ain't broke, don't fix it. What's the point of moving away from something if you're making money doing it?
All right, thanks, Steve. Wow, he could talk. All right, here's the thing, guys, okay? The one thing that I
do like to talk.
The one thing that I want you guys to have, okay, no matter what business you're doing, if it's trading the open or trading the close, okay, you have to have confidence and you have to be aggressive. And when it comes down to trading, and there's a couple guys in our chat room right now, and we're getting them to the next level, they know what price they want to get. They're technically very savvy, okay? But what they're missing is that confidence right now and that kick, that aggressive trade to get themselves in this position. I'm going to help you guys get into your positions. It can't hurt. We talk about feelers. We talk about stuff like that. That's the key to trading. Confidence and being smart and aggressive at the right time. You should evaluate your performance both on a short and long-term basis, okay? Each day we look at stocks. We're seeing how we're doing. I look at my numbers 2, 3, 4 weeks out all the time. I take my 3 best days, my 3 worst days. Where am I getting hurt? How am I doing? Where am I making my money? Is it a sector that maybe that sector starts at 10, 10:30? I always look at my time frame. Some stocks give you that opportunity. You have to study them. It's all patterns. One thing Steve said that's very important is what we're comfortable with, okay? There is no difference between watching a Tesla, an Apple, a FCX, a Cliff, whatever stock it is. If you're comfortable with it, we are looking for certain patterns in symbols. We might like XONE, you might not. I'm not telling you to trade with me. I am just teaching you the discipline, the rules that you need to trade your stocks that you're comfortable with. That's really one thing I want you guys to understand, okay? Each week, month, year, I do the same thing, okay? We are producing videos for our room now. They're only for subscribers. We are talking about what we did well, what we didn't do well, what trades worked, why they did, why they didn't, going over our watch list, and also giving you a psychological view of maybe that setup was great, I just emotionally didn't execute it right. It's incredibly important to keep learning. I'm learning every day. Real quick story. Yesterday I got hurt after the Fed. I traded something I never traded before, NUGT. I entered it. The volatility was extreme. I got burned, okay? But I came in today and I said to myself, it was the wrong thing to do. I got hurt. I didn't trade NUGT to make my money back. I traded what was on my game plan. I did the right thing today, and I had a good, profitable day. And that's what I do best. I'm not perfect, okay? Either is Steve. But we come in every day confident with a plan to trade the open, and we absolutely have a passion and love what we do. 13 years of trading the open. It's probably 6 years of trading the close because I'm out of here by noon half the time, but that's what I like to do.
All right, you want to take the watch list example?
Okay, so recently stocks that we've been trading. 3Ds, DDD, SSYS, and X1, okay, are sort of like our mini solar sector, like Steve was mentioning a few years ago. We are doing well in these. They're not in play every day, but they're giving us opportunity to make money. Today, XONE happened to be a very powerful lunchtime move today. I had a very good trade in it. It makes me feel good. I stuck with my game plan. I stuck with my stock on my watch list, something I've been stalking, and it happened to be a very nice trade today. The Chinese stocks, QIHU, Baidu, Sina, you know, to name a few, have been extremely bullish, right? Pandora, Solar City, Tesla, Yelp, you know, even a Facebook, a Zillow, different stocks in my plan. I'll throw Tesla in there, maybe an Apple. All of a sudden, I have 12, 15 stocks that I am looking at. This is an example of what we do every morning, and we're going to expand it too. I'm looking to do different things with sectors. You know, this is the start of something that is going to grow, and we're very excited about it. So you can see on the right side, we'll give you prices. Wait till earnings season. Earnings season is one of my favorite times of the year. You know, the watch list might grow, but it's going to be a, you know, a discipline A, B, C type thing that we are, you know, looking forward to.
All right, and again, guys, the watch list is put onto my PDF widget every morning before we get on air, so everybody knows what we're talking about when we get on the radio. And again, when you're in our room, it doesn't mean you have to trade what we trade. We just give you what we think are the best examples of the day of stocks that we think are going to have good ranges and stuff that we can trade. So with that, let's turn it over here to trade the open strategies. Okay, generic technical analysis can be applied at almost any time frame. We have found out that over our 13-year career, we have honed in on a few, and I know in our last webinar we went over a couple of them, but a couple of the handful of strategies that we believe are best for our trade, the open strategy. Each of them is taught in depth in our room, and we focus heavily on them all the time. And basically what I'm going to give you right now is an example and our favorite. And because you guys are listening, you're going to get our favorite strategy for free. And here it is, the 5-minute high-low trade. Okay, very simple trade. The setup is a 5-minute high-low trade based on the opening bar on a 5-minute chart. Very simple. If the stock breaks the 5-minute high, you buy it. And if the stock breaks the 5-minute low, you short. The only thing required for this is a full bar must print on the chart, and you must have either a rising 8 period for a high or a declining 8 period for a low. And for me, the entry is either at the high or a penny through the 5-minute high, or a penny through the low or at the low. And for the stop, and again, depending on the volatility of stocks, you know, sometimes you might have a $5 opening bar range, but if you're truly trading the 5-minute high-low trade, you have to give it 50% of the opening bar. Here's an example. In Tesla, here's your opening bar in Tesla right here. A break of the 5-minute high along a flat or rising 8-period EMA is the long entry. Where would you get long? Right at this line here, gang. Okay, now your stop would be set basically right about here, right in the middle of the bar. And again, it looks like it's about $1 wide. Minimum measured move is the width of the opening bar. In this case, $2. We get from a high of 137. It got as high, you know, before you might want to sell this red bar, you made about $1 or $1.50 maybe, depending. But look what it did. Another interesting thing here. If you were truly looking to swing a trade like this, okay, it bull flagged right here. That's another one of our favorite setups that I'm not going to go into too much detail now, but it bull flagged and then gave you another $7 to the upside on that trade. So that's the way you can trade a 5-minute high trade. And here's another example, SSYS. Break of the 5-minute high with a rising 8. The stock gave you a $2 or $3 open, gang, and look where it did. It went 4 straight dollars without even making a lower low in here. So you could have made yourself $4 on a minimum entry and minimum risk right here at about 96, risking yourself $1. You just made 4 or 5. And again, it doesn't always happen so cleanly. These are just examples that we have seen, and I'll be honest with you, gang, that is one of the more successful trades that we make in our room. It's the 5-minute high or 5-minute low trade. I'll let Mike go over the 5-minute low right here, but again, we're very passionate about this trade. It's really a, I I wish I did a study on how successful it was, but it's one of our more successful patterns.
And one thing that these charts aren't showing, you have to lower that, is that the first 5 minutes, sorry about that, the first 5 minutes, the first opening range bar doesn't have to break in the next 5 minutes. This thing could happen at 10 o'clock, it could happen at 10:30. A lot of times if the opening range is, 102 to 105, and you get a nice tight wedge in between those, two trigger points, it gives you a setup potentially at 10, 10:30, or 11. So I just want you to understand it doesn't have to happen in the first 5 minutes. As you can see, X1, you have a catalyst. You have a stock that closed weak on the day before. That even gives me more potential. I'm like, you know what? Stock closed weak. You have your opening bar. We short at the entry. You could see that circle, that line, and we take it. Now look at this stock. It didn't crack right away, but it never violated the previous bar, and that is huge. So once you break that 5-minute low and that bar's put in, I'm not going to touch this thing until it gets back above 66 and a quarter. It looks like it gave me a nice entry. It set up a bear flag, no stress, and follow through. Here's the thing, I love the 5-minute high and low trade because it gives me that momentum, and it also gives me a stop. The key to trading is respecting the downside risk. This is a low risk, high reward potential trade for us. You could expand it too. You could do a 15-minute, and you could look at 10 o'clock, the first 30 minutes. And if those align with the 5-minute low and high and low trade, that gives me even more alignment, and I love that. We're talking about that a little bit as well. So let's go to the next slide. Okay, here's another example. It's Amazon. It doesn't matter what it is. We're just giving you clean setups that we have looked at. Here's Amazon. Here's a good example. Here's 15 minutes into the day, 5-10 break. Okay, never violates the previous bar. Gives me a nice setup. Now, where do you cover? I always say in trading, the easiest thing to do is enter a stock. The second thing is to, obey your stop. And the third thing is, where is my target? And Steve mentioned you could use targets of the opening range. You could use yesterday's range, stocks at, yesterday's support, the daily support. These are all points of, interest. But what Steve and I do incredibly well, and what we're teaching guys in the Trade the Open class, is take off half your position for a profit. And if you buy 1,000 shares at 50 and you sell 500 at 50/50, all of a sudden you're locked in. If this stock drops $1 on you, you're breaking even. So always sell half your position. I will tell that to everyone. I am not looking for a home run. We're singles, doubles, throw in a triple and potentially a home run. But you know what? It is incredibly important to sell half. And just think about that. Now you're playing with the house of money, and you're relaxed, and you book some profit, and you could use your previous entry as a stop, and you still booked yourself $250 on that trade. Never turn a winner into a loser is one of our biggest things. We are here to make money. Making money is what makes me the happiest, going to the bank every month. I'm a trader. I don't like to send emails out and make phone calls. I like to make good trades with low risk and keep booking those damn profits.
All right, guys, I just want to go back to the X1 slide right here for a second and explain to you what Mike said. As you notice, and again, this is a 2-day chart basically, this is the way X1 closed the day before it broke down right here. And you got you got about 12 straight red bars, okay? That gives you an idea for tomorrow that, okay, the stock closed extremely weak. That has to be on my radar if it breaks the previous day's low, okay? And what we got off the bell here was that quick 5-minute breakdown. But what Mike said, it bear flagged. And again, when you're in our room, you know what a bear flag is. Hopefully most of you do know what a bear flag is. But if you don't, that makes this webinar even better because you're going to want to sign up with us. and learn what a bear flag is. But again, this stock never violated up here where the 50% of the bar is, and look where it went. Okay, it gave you about an hour and a half's worth of movement, even though it stopped right in here for a little bit of a pause. That to me is why I really do believe that this trade, the 5-minute high-low, is one of the most important ones, especially during earnings season. When you have a catalyst, it's very hard to do a 5-minute high-low on a stock like, I'll just use CLF. If CLF is not really moving. In fact, let me see if I can pull up a chart of CLF right here. Give me 1 second here, gang.
While Steve's pulling up a chart, guys, I want to tell you something that we haven't talked about. Go ahead, Steve.
Go ahead.
All right, is getting distracted. And when you have a plan and when you have a watch list and you have stocks that you're comfortable with in your bucket or whatever you want to say, your basket, it's easier not to get distracted. What hurts traders is not having a plan, and I see it all the time on the trading floor. They're like looking at the open, and someone will call out Apple, and they pull up Apple, and then they question, oh my God, where'd they buy it? What's my plan? The first 30 minutes, to me, if you're going to trade the open with confidence and being aggressive, is sticking with 3 to 5 stocks. You don't want to miss that trade. So a lot of times in the first 15, 20 minutes, I only have 2 or 3 stocks that I'm really looking at. And if, I have to really come in with an A plan and, not get distracted. Once you get distracted, it's all of a sudden you start questioning yourself.
Okay, I'm going to give you guys a little bonus play for tomorrow here. Here's a 5-minute low trade that worked somewhat this morning in X1. Okay, here's your 5-minute low right here. The price is 51.81. It only worked for about 60 cents right here. But what it did, it bear flagged and then failed the bear flag, okay? And what happened? The stock took off from the bottom and never looked back. For tomorrow, this stock did the opposite of what the slide showed you. It was very strong. So we had a little bit of a bull flag closing the day in X1. So like I said, for tomorrow, this stock is on my radar for strength because of how strong the stock closed. And yes, if there's news on it, maybe it gets downgraded or something, I won't be opposed to shorting it. I'm just putting out on the radar that a move above that 54.48 level will allow us to probably get that measured move up to 55.56, and then we can take some money off the table and sit back and wait for another setup. Any charts you want to call up, Mike, before we go to the Q&A?
No, just with that X1 trade, just show a lot of times when I do continue to trade. Now, listen, I trade the open religiously, okay? But I will sit in my desk and wait. And if you are going to trade throughout the day, you have to be extremely patient. And I just saw once X1 broke that little downward trend right here today, right there, it had a quick bar. I'm not going to catch that. No one's going to catch that. But that gives me something to look at. And this is another pattern that we talk about, these reversal patterns, bull flags. And these are big, big pivot points. And when this thing put in that range, I'm looking at this thing and I'm like ready to strike above 52.25. And I did, and it happened to be a very nice reversal trade. If you look at that trend line on the 2-day, on the bottom of that trend, it never really broke. So the alignment for a short wasn't as powerful as I like. And we always talk about alignment on the daily and intraday and 2-day. Guys, there is so much information we can't talk about right now. We don't have enough time, but we just wanted to give you one, teaser, a 5-minute trade, and let's get to some questions. Let's open it up to Q&A.
All right, and John is our moderator, and he will be posting the questions for us, gang.
All right, Steve will take the first one, and I'll
let me just
we'll
fix
go back
this here.
and forth.
Okay, Randy asks, are you all in, all out of trades, or do you scale in and out? That's a great question, Randy. As Mike said, if we're playing X1, for instance, I am buying, say, went through the 5-minute high, say tier 1, tier 1.5, depending on how the stock looks to me. And then I'm selling as I can on the way up. So maybe I buy, say, 2,000 shares of X1. I'm just throwing out a number. I don't know if I really do. But if I buy 2,000 shares, I'm selling 1,000, say, 50 cents higher. Okay, I'm going to put it out there, see if I can. I've already booked $500 in the trade. Now I can have my stop at break even, and I can peel some off as I go. So maybe I sell another 270 cents higher, 380 cents higher. And what I'll do is I'll let my P&L jiggle with the rest of the trade and the rest of the size that I have, but I've already booked money in the trade. So even if it fell back down, I've still made money on a good portion of the trade, and that is unbelievably important to our business. We really have to make sure that we're taking profits on the way up or down if you're shorting. We're not all in, all out right away. We like to buy our tier, whatever our tier may be, and sell pieces of it as it's going in our direction.
Okay, Sandy, do you trade options or just stocks? Okay, so I generally right now I'm just trading stocks. I know options. We could talk about options. It's the same philosophy. It's really about the technical pattern. I know options in the first 5 minutes might be a little too thin, but we are stock traders. We do trade options at a time. As of now, I'm having a lot of success just trading, equities without the options, and I don't need it. I get sometimes distracted. I'm a trader that loves coming in flat. You could take home a feeler. I'm not taking home much size. One advantage of really how we trade and trading the open is you don't need that much equity. You're not influenced by the overnight tape, and you're really coming in with a clear head every time. And I think with those three things, that's what makes me tick. I don't like stress. I don't like dealing with things I don't have control over. And, that's what makes me tick, and that's what I got to stay with. So as of now, we are stock traders, but there are options traders in our chat, and I will give you, advice on that as well.
Okay, Vivian asks, what happens if the stock goes down after the first 5-minute bar but then goes up later in the morning? Okay, that's another good question. For me, if I buy a stock and it violates my rule, like let's say I bought X1 and it failed right away, I'm out of the stock, but that doesn't mean I'm not watching it. I'm looking to see how it trades to the lows. Does it make a new 5-minute low? And if it bases like X1 did today and then takes off, I'm still using that high of the day as my gauge to get long. Again, it's a bar that doesn't mean it's an exact science. Okay, so if I bought it at 10:15, I feel a little more confident that I was going to be right if it made a new 5-minute high, let's say, versus if I bought it at 9:35 and 30 seconds, because if it failed right away, I wouldn't feel as confident that it was going to go right up. But at 10:15, it's already had the first half-hour gyrations. Maybe at 10:15, that 5-minute high is still set. When it takes off through there, I'm feeling a lot of confidence there.
Look, there aren't any bad questions, okay? Mark asked, daily recap, 2 days ago, you grade about 7 stocks on a daily basis. How do you have much time to set up stocks? Okay, so I'm not entering, Mark, all 7 stocks. I'm breaking it down into my A, B, potential C list. Like I said, off the open, especially in the first 15 minutes, 30 minutes of the day, I'm focusing on a basket of stocks, but I'm really concentrating on the ones that I believe potentially gives me the best scenario. Maybe a daily setup, close to yesterday's high, an earning play, stuff like that. Maybe a little upgrade in the morning. Any little catalyst, and the catalyst is key to trading the open and really trading throughout the day. Why do stocks go up or down? People get frustrated a lot on the trading floor throughout the day in so many stocks, but I listen, okay? I learned this business really through people who didn't do well. I did the opposite very early in my career, and it worked, and that's how I build my business. And I listen to people struggle, and I write down the stocks and like, well, that stock has no catalyst. Look at the daily chart. Look at the intraday pattern. That's where you get hurt. We are pattern traders, and I take the few best stocks every morning and, strike, and if they don't work, I hit them out. I accept my loss and find that next pattern.
Okay, Joseph and Barry asked, do you use mental stops or hard stops, and how much do you watch the level 2? That's a good question. I never, ever use hard stops unless I'm walking away from my desk. I'm a conspiracy theorist, and I do believe that market makers do have the potential to run the stocks. They can see our stops. I do believe that. And I've had many a time where I'll put out a stop, and I'm sitting there, the stock will go down, hit my stop, and then go the direction I expected it. So I'd much rather have a mental stop when I'm sitting in front of my desk, because I don't want to take the chance that somebody can see my order and want to liquidate me there. As far as watching the level 2, again, I've gotten away from, I used to call myself a level 2 specialist, where I could really, manipulate my positions because of watching the level 2. But lately, because of the algorithms and all that, size on a bid or offer doesn't matter anymore. And I've tried to get myself away from watching the level 2. I'd say I watch the level 2 about 30% when I'm in the trade, and I try to keep more of an eye on the on the chart when I'm in the trade, to try and really manage my position. Again, the algorithms, they'll hit 10,000 share bids like they're nothing anymore, and it's gotten away from me where like I said, I used to be a specialist at level 2, and now I feel like I'm a rookie trader when I try to follow just what the level 2 is doing.
Always have hard stops, though, if you get up from your seat. If you go for lunch, you don't want to come back and that stock's, $2 lower. Always have that, stop in place.
Yeah, when I'm not in front of my seat, I always have a stop put out there, because that way, if something happens in the market and I'm not there, I can get out without too much damage.
Okay. Let's go on to the next question here. Pre-market gaps, incredibly important. Listen, gap fills are one of my favorite things to do. Reverse trade gaps. If I don't know, Microsoft has good news and the S&Ps are up 8 handles, and you see X1 up $1.50 because of the S&Ps are up on Microsoft news, X1 might be a nice short if it's near resistance. So pre-market highs and lows, I don't really take too much effect in, but the previous day high and low, that range is huge. Do I ever trade pre-market? I do. You have to understand, though, pre-market, if I make a little bit, it's like, whatever. If I lose a little bit, I get very angry at myself, like, what am I doing? So, like, for me, unless it's a really good volume type trade, maybe a big economic number like a job report, an earning play, pre-market and after hours, we do trade earnings, that's one thing. But just to jump in, I always talk about feelers. I'll put a feeler on. If I think Solar City, for example, today was strong, maybe I buy a feeler, pre-market just to keep me in it. But to really put on a trade, I think that's a little aggressive for the way I like to approach my business.
Okay, next question is, how many hours a day do you do homework and research the next day's plays? I'll be honest with you, right now I already have, like I told you earlier, about 7 of my plays for tomorrow already written down. So I would say, I do about half an hour a night at maybe a night doing some chart work and checking what my watch list is. But a lot of my work is done intraday and then pre-market tomorrow morning. So I get in front of my computer every morning at 7:30, and by 8:30, I'm usually 100% ready to trade what I want to trade. For me, it's very important to be prepared, like I said, and I always write down every day the highs and lows of the stocks I've traded to the previous day. I have my 7 stocks written down, and every one of them has the high and low written down. So tomorrow, if they're weak, I know that my first entry might be through the low previous day, or high, if it's strong, maybe the high of the previous day. It's very important that you guys know what you're looking at. I like to go to bed at night knowing when I wake up in the morning, I'm not just looking like a deer in the headlights, and I'm just hoping that I find a stock that's going to be in play. So hopefully that answered that question pretty easily.
Yeah. Next question, Diane. I'm going to start how Steve always starts. He says, this is a great question, and I'm going to be honest with you. Well, this is a really bad question. I'm going to be dishonest with you. I mean, state the obvious. So what time do you start the chat in the morning to prepare? Did you just answer that?
I did not. Go ahead.
Okay, we are on air, Steve and I, 8:45 every morning. We are on air from 8:45 to 11:30 every day. We are game planning. Steve and I will talk about the stocks we're looking at, and then you guys are open forum to about 9:25. I like to, the last 5 minutes before the open is a time to really just settle in. If you don't know what you're trading,
fill up your water.
If you don't know what you're trading by 9:27, you probably aren't prepared. So I always say that the last 5 minutes, just get yourself calm. And we're on air Tuesdays and Thursdays doing education from 1 to 2:30. I'll answer the next one as well.
Go ahead.
Christopher asked, do you close positions on a time-based example when it's 11:30 and do you have some of your position left? Do you close it out? Okay, what we do, okay, is if the position hasn't broken down or failed, we'll put trailing stops out. If I'm not at my desk and it's 11:30 and the position still looks great, I will keep that core position. Trading the open aggressively, managing positions in the afternoon is exactly my business. I love morning trades. If an X1 has a $2 to $3 range in the morning and bull flagging at 11:30 to 1 o'clock, you better believe I'm going to put on a position. I have a strict stop. I also have rules in place. And one thing that I want to really talk about real quick, it'll take a second, is understanding money management. And if you're having a really good morning and you want to trade, so let's say you're up $1,000, $1,000 before 11:30, you get lunch, you love a pattern, have that discipline and sense. Give back no more than 25–30% of your day. Don't stress out. You had a great morning. If you want to try something, give back $200–300, but book $700 and come back the next day and do it all over again, and you will be a happy trader.
Jason asked, will the Eagles defense show up and play tonight? Well, Jason, that's a great question, and I hope so. My guess is no, and unfortunately, I think it's going to be another slugfest. I hope the Birds pull it out. But my guess right now, if I had to say, is I'd be shorting the Eagles defense. Randy asked, what do we see in your mentoring room, your screen? That's a great question.
And I'm going to be honest with you.
It's a very good question. What do we see? You're going to see my chart, Mike's chart, and the one thing that you can't do is have both our videos open at the same time. So you're going to see my chart and what I'm talking about, and you're going to hear, just like you hear me now, you're going to hear me live trading, talking about what I'm looking at, pointing out bull flags, bear flags, 5-minute high lows, and you're going to do the same thing with Mike. Like Mike said earlier, we are human beings. We do make mistakes, and sometimes we are emotional. And, it's understood. It's one of those things where it's very hard to trade, talk on the radio, and try to educate. And when you're losing money, it just makes it that much harder. I'm a little better than Mike at turning my microphone off and throwing things around the room and then getting back into my seat. But Mike definitely wears his P&L on his sleeve, and you can sometimes hear that, and that's not a bad thing. He's the more emotional of the two of us. But that's what you will see and hear when you're in our chat room.
But one thing I want to say real quick, and I'll get to Tom's question, is the traders who are in our room learn more from when we do mess up and when we do get emotional, because they realize, wow, I'm not alone. I'm learning from this guy, and they really respect and appreciate that. So to me, I think it's all four. I would even be probably more crazy if I was allowed to. It's not a bad thing. I'm not a librarian. I'm a trader who's trading real money all the time. I don't get paid, a salary or an hourly wage. So it's you know what? This is real money, and everyone listening to me is in the same boat. And, respect that dollar. Keep your emotions tight. But, it's okay if you lose it once in a while. Just understand that it's, it's part of the business. And we're
let me just interject real quick, Mike. One of the things, guys, that I'm a true believer in is we're not robots. We don't make money every day, and if you're signing up with us thinking that we do, you're going to be upset, if we have that losing day. And you have to understand that we do lose money, and you're not learning anything if we're not emotional and we're not losing money, because we can't teach you if we haven't learned. One of the most important things that I think, I've had a bad day. I had a really bad day last month, and it woke me up. It absolutely killed me that day. But then I started realizing that I was an idiot and I was completely undisciplined. And from that day on, I haven't had a day near that. And it was a humbling experience, but it taught me, and it always teaches me, to just be smart with my, positions, my P&L, and to really, when I have that bad day, step back and really lighten up on the gas a little bit.
Let me answer Tom's question real fast. Tom asks, what criteria do you use in a scan to build your watch list? Now, I have used scans. One thing scans do sometimes is distract me. So my scan is really my work, my chart work, my highs and lows, my trigger points, my daily charts. I put everything together to find my stocks. So I'm not depending on a scan to give me my trades. I am watching probably about 15 to 25 stocks every day. I rotate them. I put a couple new ones in. That's really my scan, Tom. But there are things that I am going to work on, and we are building scans that we do follow. Maybe the 5-minute high trade, and put criteria of all the stocks we are looking at. Real quick, I know we have to go. I'm going to close on one note, guys. I love trading. I love everything about it. I teach with a passion. I want everyone.
Teaching as well.
Yeah, I love to help traders because you guys are wanting to do this. This is the first step into entering the business or even becoming a better trader. You're here. Hopefully you enjoyed it. One thing I want you guys to understand is this is a tough business, but you can make it into a very successful one. Steve and I are not Harvard grads. Steve doesn't even know how to spell Harvard, but we come in every day with the attitude and the confidence to, really make a living out of this. And, we have 13 years to show for it. So I'll let Steve close, and it was great talking to everyone.
Guys, like Mike just said, we are absolutely passionate about what we do, and I really appreciate the time you gave us. I'm going to turn it over to Mike Milani now. Go Eagles, and everybody have a great day.
Thanks a lot, guys. Great questions. I see a lot of guys that I know in the chat room right now. Casino, Bill K, Sean Ward. I'm going to have someone reach out to you tomorrow. I apologize for missing our call yesterday. Again, Mike and Steve were great as usual. A lot of really interesting trading information there. Thanks for that. Everyone, just one quick minute. Thanks for attending. If you enjoyed the content of the webinar and we wanted to extend to you just as a register to this, an exclusive discount on our new Trade the Open mentoring room. We're offering a 6-month package for $1,000 even. The normal retail price is $1,800. The offer is going to be available for just a week. Like I said, it's sort of a relaunch of the product, and we want to get guys into it and get a lot of the same questions and a lot of the same people in the rooms that have been in the past. So it's 1 week only. It's $1,000 for 6 months. You can email us at customerservice@t3live.com, or you can give us a call at 1-888-998-3548. You can always reach out to me or any of the sales guys, Sammy and whatnot. Again, if you haven't signed up for Redler's Morning Note or Sperling's Trade of the Week, do so. Guys have really been getting a lot out of it. And feel free to sign up for free on the websites, t3live.com. And again, thanks for attending the Trade the Open webinar, and we'll talk to you soon.